Welcome to CEO Insights. I'm Marilyn de Guzman with Investing News Network. I'm speaking with David Dickson, Managing Director and CEO of Lake Resources, about recent developments at the company's Kachi Project in Argentina. Hello, David.
Hi, how are you?
I'm good. It's good to have you here.
Thank you.
So let's start our conversation with just an overview of the Kachi Project and what work has been done to that project to date.
Yeah. First, thanks for having me on. Lake Resources, our biggest focus is really around our Kachi development, which is in the province of Catamarca in Argentina. Our plan is to ultimately produce 50,000 tons of lithium carbonate battery grade per year, and that'll take a number of years to build that up. And so that's really what the aim of the company. We do have other assets in Argentina, but our primary focus is developing our Kachi asset. And what we've been doing over the last 10 months since I joined the company is resetting the whole project and the business and obviously setting up for success. So what happened a few weeks ago is that bit of a lot of work that's happened over the last 10 months, and we provided this operational update to the marketplace.
Right. So let's talk about that operational update. So you've recently released that operational update, which has led to a downward spiral in your stock prices. Could you, for viewers who may not be familiar or investors who may be seeking some clarity, could you provide a recap of that operational update?
Yeah, it was obviously a very lengthy update. We webcast that back in Sydney back in the 19th. So as I said, it's the update of 10 months of work of really building what I call kind of Lake Resources 2.0. We built a new executive team, but more importantly, built a strong technical team. And as you think about this thing, although we're in the mining business, we're actually we're in the specialty chemical business. The mining element of this project is actually fairly straightforward. It's very much similar to oil and gas upstream. We're drilling wells, shallow wells, not particularly complicated. And then we're taking the upstream, the liquid, and obviously converting that into this lithium carbonate, which is where the complexities come, which is all about chemical refining rather than about mining. So it was important that we brought a team together with combined assets taken from mining and oil and gas, particularly in process engineering. And we reset the project. We analyzed it, we looked at it. So what the update really came out with was, we have shifted our first lithium date from the end of 2024 to second half of 2027. And we've got a strong story of the building blocks of how we get there. Everything from, producing our DFS at the end of 2023, then go through a period of getting permanent approvals with regards to our EIA, completing all our financial raise with regards to capital, and then getting to a point of, final investment decision, early 25, and then looking at building a plant for this size, a plant roughly 2 years to buy and erect a lot of steel, and then 6 months of commissioning and ramping up. So that then takes us to the second half of 27. So that was whole part of the process. Now that execution, we also changed the philosophy and how we're going to build this. Initially, the company said they were going to build a plant to produce 50,000 tons, which in itself comes with a lot of complexity and risk. And that's where the oil and gas experience comes into play. The petrochemical side comes into play, because building a process plant at this scale does come along with a lot of complexities and challenges and ultimately risks. So we decided to split it down to two 25,000 ton phase project. And within those phases, split it into 2 times 12.5 trains. So essentially we're going to build, 4 plants at 12,500 tons over a longer period of time. So what we want to do was to bring credibility, reality, and ultimately de-risk the project. Now, with that comes a delay, but also we also revisited the level of capex, the level of capital is needed to build this, and we come out with a range because we're still in the early days. We haven't completed our DFS, and obviously we'll tighten those numbers up when we get to the DFS. But we come out with a range which was somewhere between double and treble the capital costs, which had been previously stated by the company. So as a result, with those two pieces of bad news, obviously we've had a very negative impact on our stock.
But then on a positive note, in that same operational update, you've also announced a significant resource growth. Could you talk a bit more about that?
Yeah. So as we're progressing here, one of the things that we are not concerned about is our reservoir, our resource. And you'll have seen from the JORC report, we updated everything from the level of the measured resource to what we got indicated and what's inferred. So from that aspect, we have very little concern. And in fact, what we talked about at the update is we're being through a kind of bad news, really good news scenario. And there's that as we look at where we're going to drill wells for reinjection purposes, and this is to reinject the spent brine after we've extracted the lithium, is that we're finding more brine. And we're finding brine which is also at a higher quality than the brine that we are looking to work with. So from a reservoir basis, we don't have any concerns. Still got a little bit of work to do and field work to be done to get to the point of DFS and further forward. But yeah, from a reservoir basis, yeah, very, very happy with it. With things are progressing at Kachi.
Just going back to when you were talking about some of the, I guess, the trends that drove you as a result to, have a reset and change your targets and in those planning. Do you see this challenges? I think this is I guess a global thing that's happening right now with costs being high costs, supply shortages. Is that something you foresee continuing into the near future, and has that been factored into your revised targets?
Yeah, I mean, from our side, I think what we have now is a story, I said earlier, which is credible, it's real, and we've taken a lot of the risk out of the out of the building this whole facility. And I've only been in the mining industry for 10 months, but I think I said earlier, when I look at this is not a mining project, right? This is this is a upstream oil and gas with a specialty chemical process. And I think the industry itself is going to go through some sort of learning curve or transition to really learn what it takes to develop and build something like this. I have seen that there are some other companies now coming out with delays, increasing costs, and I wouldn't be surprised to see more of that as this industry develops, and particularly in the DLE world. I mean, DLE is still new, right? So we're still in the early stages. We're working with Lilac. There's a number of other technologies being developed. So there's still a lot of learning to happen or to go through to get to the final point. So I think as an industry, we're going to see more and more, I hear more and more noise around projects, increasing capital costs and delays on getting things done. I mean, end of the day, one of the challenges is always going to be around critical equipment and supply chain, and these things will continue.
So looking ahead, we're expecting to see a definitive feasibility study planned for December 2023. So what can investors expect from that DFS?
Yeah, so the DFS, we said a few weeks ago, is that we want this DFS to be as close as possible to what we call a bankable DFS, right? So I want to be able to take this DFS and use it to, as well as prepare for our submission of our environmental impact assessment, but also use it to trigger two things. One is to start our due diligence with the banks and the ECAs that's going to provide the capital. And I think it's important to get to work immediately after the DFS. And so therefore the DFS has to be close to bankable as possible. Very, very well defined. we also use the DFS as a trigger to start our negotiations with our off-takers. And so it's really important that the DFS is well defined. So yeah, we should out with revised capital costs with a plus or minus 15, a revised OPEX cost, revised timing, which I wouldn't expect to see much a difference, confirmation of the proven reserves that we can produce 25,000 tons for 25 years, all the technical work with regards to layout of the plant, the facilities, etc. So that's kind of what we're targeting to get done.
So aside from the upcoming DFS, what else could the investor community expect from Lake Resources in the next few months?
Yeah, I think the DFS is made up of a number of components, and I think what we'll try and do as a company is look at what are the news flows that we can release to the market as we go through this, because a lot of these components of the DFS we will complete before end of the year. So as we complete various parts of it, then we'll expect to release some news. I mean, certainly we'll have updates on our job report. I would commit to what time that is, but there will be further updates. And so we will look at the news flow that we can get to the market with regards to the progress that we're making, but also to give the market confidence is that, December is still the time frame for us to get to DFS.
Great. Well, appreciate your coming today and sharing your insights, David.
Thank you.
And thanks everyone for watching. Join us again next time for another engaging conversation on CEO Insights. If you like this video, subscribe to our YouTube channel and turn on notifications so that you don't miss any future updates and interviews.